Welcome to another edition of the Forex Technical Market Update. I hope you are all doing fairly well and the day is treating you well, whether it's day or night. I'm recording this at it's just about 11:10 Eastern time, and in front of me I have the chart of the euro currency, the daily chart of the euro, and we are getting some resistance. And let's just take a look at the euro and take a look at some pivot points. And now, while pivot points are not always 100% accurate, they tend to forecast the high and low of a season, or a not a season, a period. And what we have here is the weekly R1 resistance that the market stopped right at the weekly R1 and is backing off, and we're currently trading just below or just above the S1 pivot point. So pivot points are good for scalpers, folks who trade using a scalping method, who are in and out of positions using targets, etc. The pivot points, I would say, are not bad for that type of method. And but for us forecasters, it tends to give us an idea of the projected high and low of a particular currency. Now, moving to looking at another pivot point, we have the monthly pivot point in the euro at 114.78, which could, this entire area could act as resistance in the euro. This area from 113 up to 114.78 could act as resistance in the euro. Remember, we have the non-farm payrolls report tomorrow, and that sometimes sends the market all over the place. Okay, so support in the euro currently is, we should look for some support in the 111 region, and also longer term support is at 110.64, and resistance currently is at 114. These previous highs here, which come out to 115.38, these are the resistance areas in the euro. Okay, taking a look at the British pound Australian dollar, we see that yesterday we spoke about the triangle, and the market closed below the triangle, and we're getting some continuation. But I mentioned the fact that these low points could act as support, this previous low, and that's what has happened so far. The market seems to be bouncing off of this support and could we'll wait and see if the market closes back in this consolidation. But the prevailing trend, or the prevailing chart pattern now, I would say, is more of a channel. I would say this market is in a channeling situation, with boundaries up at 195.20 and support is down at the 190 region. So to me, that's a prevailing chart pattern in the British pound Australian dollar. And let's dig deeper into what happened yesterday. Again, we were at a monthly pivot point. All right, the monthly pivot point was 190.80. And one thing to learn is that with the British pound pairs, the market can go above and below the pivot point numbers by a couple hundred pips. I mean, the British pound is very volatile, and the market can go up and or below quite a number of pips. So we had our monthly S1 at 190.80, or weekly S1 at 190.60, and we had our support point at 190.30 or so. And this area proved very strong support, and as you can see, the market is bouncing. Now, for the British pound, we have the elections coming up, and that could send this market any direction. As I've been saying for the last couple of weeks. I'm positioning the portfolio to be long this market and hoping to see if the market can break above this 196 area and ultimately test the $2 mark. So that would be over 800 pip move if this comes to fruition. Remember, we don't make money by trading after the fact. I'm telling you exactly the position I have at this moment for the Forex Income System members, and we're hoping to see this market break to the upside. If it doesn't, we'll take a small loss and move on to another trade, and that's how you have to trade. Okay. Taking a look at another market that is of interest, Australian dollar. Again, it's the Australian dollar, New Zealand dollar. As you can see, this market was, or just let me bring out the larger trend. This is a daily chart, and as you can see, this market has been in a downtrend from 2011 to now 2015. So it's over a 4-year downtrend. Let me go to the weekly charts and see when exactly it started. Actually, yes, just about 2011, the market topped out. You have a head and shoulders pattern here. Shoulder, head, shoulder. Market broke the neckline and has been declining ever since. Okay, so we're in a downtrend. Now this market is pulling back to it's currently at the 50% retracement level, and also let me go to the 4-hour chart and look at the monthly numbers. We're near the monthly pivot point of 105.96. We could see this market rally further, and I would like to see it rally up to the 108.07, and then that area would line up with the 618 retracement level, and also this previous swing high, which could act as pretty significant resistance in this market. And if we do get evidence of sellers coming in, this could be a possible short. I mean, I'm not being presumptuous. This has not happened yet, but this is how we analyze the markets and look for trades that we can take, no matter what time frame you are trading. You look for setups and execute when your version, or when the market reacts the way you want it to react, you can then execute. But that's just giving you a heads up on that market. Now we see the British pound, and another thing, back to the British pound. Let me go to British pound, US dollar. As I said, the UK election is coming up, and there is definite event risk. And email question I received was, will I take off my positions because of the UK elections? And my answer is no, because my stops are in, and I'm trading a definite system. And when you're trading a system, you follow the system to the T. So just because UK elections our results are coming out, I'm not going to abandon the system. We're still going to follow the system. Throughout the non-farm payroll report, we still follow the system, because I know over the long term that the system is a profitable system. Yes, you may have upward months and down months, but over the long term, the system makes money over the long term. So I'm not taking off positions just because a fundamental announcement is coming out. So that's a lesson in following systems and just executing your plan. And because the risk in each trade is fairly small, 2%, 3% per position, we can afford to take losses if the trade goes against us. Okay? Well, also, let me quickly look at the gold market, and we're coming up on support in this 1180 region. Let's draw the line here, 1180, and top is around 1220. So we're in a channel situation here in gold, and we're just seeing if the market can close below this 1170 area. If it does close below this region, 1170, we could set up for a test of the 1140 area, which is critical long-term support for the gold market. Okay, thank you very much for listening. Remember, if you want to participate in these trades and not just view them every day, you can click on the link below, and you will be positioning yourself to capture these longer term pip movements that the market does from time to time, and can result in considerable gain. So click on the link below, and I'll see you again tomorrow. Thank you.